Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn & Associates with your metals market update for this Thursday, the 13th of December, 2018. And we're around the 225 area in the afternoon. Looking at the markets, you can see it's a day of red in all of the metal markets. But is it a correction day and no more than that? That'll be the big question. The dollar is slightly higher. 2 ticks is not what I call much higher, and down 3 in the euro is not much of a break either. The stock indices pretty close to unchanged today. If you'll notice the notes in the bonds, well, the longer end of the market is seeing higher interest rate come in. You're pretty flat in the 10-year note at this point in time. Energy's got a bid today, and word is that the Saudis are going to cut a lot of shipments that they were making to the U.S. for oil. The reason being they don't want prices, too much oil here, to keep prices too much down. So maybe they'll cut their production, but they seem to want to make WTI prices come up. Very interesting ploy. We'll see what goes on. And we saw a big draw in Cushing oil today as well. So let's take a look, if we could, at the charts. Now, this chart's going to be of gold on the weekly basis. Even with this correction that we've got right now for the week, we're down 370. It's very minor. The market still has a pattern of higher lows, higher highs, and it's staying over the 18-week moving average of closes. That is bullish. As we take a look on this chart, the market is starting to come down a bit here, and you can almost see a trend line where the market is slipping right at that top part. And what we've got now is the swing line pointing down. You have the pattern of lower highs, lower lows. You cannot get a bullish pattern out of this right now. Even if the market shot up over 1250, 260, you'd have the lower and low, higher high pattern. So where might the market fall if it keeps going down? Possibility now is the 18-day average. As I mentioned yesterday, said if you broke through that low, then you've got a new problem of getting down to that number. I would not be surprised if the market tries to work itself down there. And what stopped the rally was the constant testing and unable to really break through in a major way the black line on the top, which is the Bollinger Band. Remember, a Bollinger Band's an algorithm designed to keep the market trading within the bands, lower and upper, 95% of the time. The bands will get narrow at times, and then they'll widen out as the trend kicks in. You've had an uptrend, now the market's pulling back. It doesn't mean it's in a bear trend, it's a pullback. As long as the market stays over the 18-day average, you're going to hear me say it has an upside bias. However, if the market were to settle like this, and I already know because it's going to, how? Settlement price comes in at 1230. But you still have another hour and a half of trading roughly. So as that's going on, you're losing the embedded reading, and as you lose that, if it stays lost today, unless tomorrow is a big up day, the odds favor that that means price in the 18-day average will make a run at each other. When I come over to the gold ETF, GLD, it has not lost its embedded reading at this hour. It does have the swing line down now, but the market could make it to the 18-day average. But until this number gives up, the slow stochastic in this case, I say the pros are still buying this one. So it's a difference between the two, and it's all because of what the slow stochastic is doing. In GDX, the popular mining ventures for metal, you can see that you're trying to establish a lower high and higher lows. You are overbought, not with an embedded reading. So I'll say the market has hit some upside targets and it's stalling out. In the gold-silver ratio, I think this is very favorable for the base metals. Typically, when you get the gold-silver ratio breaking down, it means that the base metal, silver I do consider a base metal. I realize there's ads on TV that it's an investment. Okay, since the Hunt brothers, back I think in the 80s, I don't know that it's been an investment. They attempted to corner the market, and then the market came apart. We've had another good rally after a big break in it. But Right now the market's just sort of sitting, and to me that's not the price of a precious metal. If you want to talk precious metal, talk palladium, talk markets like that, platinum. I mean, they're much more expensive than something that's trading at $14 an ounce, and there's a lot more of this. Higher lows, higher highs, market running into trouble over the upper Bollinger Band, support back at the 100-day average, and overbought. A little difficult situation. In the copper market, you attempted a breakout today to the upside, and you had a miserable failure. At the end of the day, the market came back down, closed back under the 18-day average of closes in red, found its legs, if you will, back at the 100-day average in the green. So I'm going to still say the trend is up until you take out 275.55. If that were taken out on this formation, it would still not be bearish. It would just mean the market's had a big battleground at this 18-day average, and you'll hear me say what I call the line in the sand, and you tell me that wasn't the battleground, and it's unable to get through it on this part. In the platinum market, this is what you call a snooker play for those that got knocked out of the market yesterday and on that rally and back in. However, this is a trap for those that are getting bearish now. Why? Because you lost the embedded rating 2 days in a row. It puts a high probability on price and the 18-day average over the next couple of days making a run at each other. Does it mean I'm going to be right on it? No. I said it's a high probability, not a guarantee. But go back and look what happens when you lose embedded readings, and you'll come to your own conclusion. If you take a look at the palladium market, you can see how you're overbought. You're unable to get back to that upper Bollinger Band. You keep going to it and sort of backing away, but I'm going to continue to say I think this is the strongest of the metal markets, and the dollar being up, even though a fraction today, it's not offering the oomph to the metal markets just yet. And I think what hurt the markets in a way is gold often looks at what the euro's doing. I know you might not agree with that. Lay the charts over each other and you'll understand what I'm saying. You'll see it. And the euro ran into a problem today with Mario Draghi basically saying that things in Europe aren't as good as they could have been. The outlook is dimmed. The GDP is forecast to shrink a bit now over the next 3 years, and that inflation is having a hard time grabbing hold. So none of that worked in gold's favor today. You know, my futures trading kit contains so much that you might want to look at. In the earlier video that I did, I had this up and I was talking about my charting course, because it will lead you to the charting course, which I've lowered the price by 33% to $99.95 for the Christmas period, and then right up in front of Christmas I'll probably raise the price again. But these are the different ideas of what goes on, and what we do with this is we try to give you the best of everything we know, including from the exchanges. If you go to the CME website and you try to get through it, you're going to get probably confused. We make it easy. We point you into the directions you might want to go. We have a lot of different chapters, a lot of information, some areas with quizzes to teach you. And that's not my charting course. This teaches you as a beginner that wants to look at the futures markets, how to go with it, cause and effect sheets, chart patterns here, how to work with pivot points, the Arun indicator, and I'll keep adding indicators this year so you get my ideas on how to work with these. But it all comes together. And I said this is the part of the CME website, and you'll be able to get Fed fund rates, the probabilities of rate hikes coming, things of that nature. How do you put it all together? It's simple. All you need to do to get this, and it is free, call my staff. You can go to my website. If you go to the website, while you're there and signing up, you might want to go look at education for the charting course. I'm Ira Epstein. You have yourself a good day, and I'll talk to you tomorrow.